Hello, Warriors. Welcome back after yesterday's Twilight Zone episode. This should be normal TV. Hi, Sinatra, Glenn. Hi, Bran. Kman, Michael, AJ, Laura. Hi, Paul. Everyone doing okay? Hi, team. Kman, Blake.
Morning, Coach.
Hey,
Morning, coach.
so yesterday I was talking to Ryan about this. I had this line drawn in cable for, a long time. Weeks ago, I drew this return line. It still amazes me after all these years how markets can react to something like this. Um, so I think it was Brian said you could buy a little here there. So, that looks pretty good for now, but so did TLT. Just have to warn, although this was better action than TLT, we came off the line and bounced with two red candles and then had a throw over. So, has to get back within the formation, but I don't know if cable's going to do that. So, what do you guys think? Has the dollar topped, or you know, do you still want to buy pullbacks, buy dollar weakness here? Okay, man.
I am I'm still in the latter to try and buy pullbacks on the dollar, but I must say that this morning, as people will see from our trades room, that I've lobbed most of my dollar longs out today. I'm in P&L protection day today because I don't know really what to expect. It could be that we have seen a few targets, intermediate targets on dollars. You showed the cable. Aussie is behaving pretty well. Euro had that little dip pre-PMIs, but this is doing a little bit better now as well. I'm in wait and see mode right now.
Okay. Um, Yen, same thing. It's
Yeah.
comatose, but
Can't buy it, can't sell it.
yeah. All
Can't
right.
chase it, and it's really hard to set it up here unless one is really convinced that they intervene towards the end of the week, or yeah, or having deep pockets and carry it for longer. I mean, the officials, Suzuki said they are ready. They can intervene whenever they want, whenever they like, whenever it's needed. I think Friday is going to be a very hot day if nothing happens in between.
Hey, Kman, and I just want to ask this question really quick. I think that raised a couple eyebrows, because he hasn't used the term intervention. Is that correct?
Who, Suzuki?
Yeah,
Oh, yes,
I
he
was,
did.
and but he hasn't been using it recently, and I think that verbiage, um, yeah, I was reading this from Citi. It says. Yen was unresponsive to Finance Minister Suzuki comments, despite explicitly mentioning intervention. Well,
Yeah.
maybe just because he mentioned it.
No, well, I mean, they came back from Washington, right? And it's the first time they really speak since they're back from Washington. But he just confirmed what we thought, that that they got the green light from Washington to intervene whenever they found it necessary to do so. Yeah, it has zero impact in the market because we've heard the kind of rhetoric already a lot of times, but for as long as they don't intervene, why would you buy in, right? As I said, unless you think they are really on the verge of, and then you just stick it in the drawer and hope they will sooner rather than later. I think Friday is going to be a very hot day for the yen traders.
And that's
Oh,
why you should listen to the Flow Show, not City.
Exactly.
Yeah, if I can drag my ass out of bed at 2 a.m., I would have for sure.
Exactly, but everybody can listen to the recordings. Huh?
so yields are look like they want to press the highs again.
Yeah,
Comments?
we're starting the real Treasury auction program for the week today. We've seen those European PMIs go up a little bit, prices going up a little bit as well, and I think the market is expecting the US PMIs to show a bit of the same, and then added to, we've got 2-year today, 5 tomorrow, 7 years the day after tomorrow. Maybe there is that inflection point, if prices remain sticky or even go up a little bit, that yields all of a sudden, and the Treasury don't find enough buyers for their program, or the buyers that they would want to see.
This is not the new refunding package. This is
No,
already
next week, Dale.
okay. May
Next week
1st
we
or
see the announcement.
it's May 1st,
Yeah,
May Day in Russia.
Mayday,
Okay,
in all
May
senses
Day.
of the word.
All right, so the big question in yields here, Ryan. You know, you have a feel for this. Are we going to have this where this was just a correction of from October and we're setting up some type of buy zone, or are we going to have one more capitulation in the bond market to take yields to new highs on the long end down here? So the daily and weekly have, different looks. Which be an optometrist. Do you see it clearly? Did it here, or is it better here? Here or here? Which lens do you want, man?
Well, it's a good question. Both are in downtrends, aren't they?
That's
the
right.
weekly,
Good
that's in a
point.
clear downtrend. The daily's in a downtrend. The key is going to be what's going to get yields jumping that much higher. It's going to be continuation of strong data, but it's mainly going to be inflation picking up. And we're walking a bit of a tightrope on that at the moment. It hasn't gone down for 10 months. If it starts going up again, then you're going to see yields busting higher, and your ETF there is going to be heading down towards your 80 level.
Yeah. So could it also just be supply? Go back to old supply demand. That the market's overwhelmed with supply, which we'll find out next week.
Yeah, we got some this week as well, but you would get that quarterly refunding update as well. I think the market's really taking it in its stride at the moment, unless those refunding numbers really take off. Which you got to think what happens under the next president, whoever it may be. Are they going to increase spending further, or are they going to dial it down a bit? You never know, but. I think the supply issue, we had this big supply stuff coming in beginning of this year, latter part of last year, and the market's taken it in its stride. There's not been any wobbles. So I think that's going to continue. But if rates stay higher, it's going to put pressure on the US and that supply, because they're going to be paying more interest, aren't they?
Yeah. So why don't we talk about risk? So we had that nice recovery. I've seen this labeled as the end of 3, and we could see it rally up here towards 51 and a quarter, but that these aren't the lows. So I mean, if we have a quality, this is a pretty good break. It's 350 handles. So say we get up to 51 and a half, Coinka Dinkley, equality would take it back to 4,800, the breakout. So,
but if that's the level of dip and it can't even get to the 38.2, when we bounce back up, that's going to show you how strong this market really is.
Yeah, I'm kind of thinking that it's in 3 waves. This correction. This is A, and we get a B, and this is a bullish outlook, right?
Yeah.
Not a 1, 2, 3, 4, 5 crash like some others are talking about. Although if it takes out 4,800, that's a new question mark. But I'm thinking A, B, and then C, and maybe by then you really do have a nice turn in the dollar. So, and lifts all boats. So that's my thought on risk.
Good
NASDAQ,
thoughts as always, mate.
what's that?
Good thoughts as always.
Okay, so NASDAQ's still weaker. Russell looks like it could, rally back to above 200 here and then fail again. So we'll see. I'd be tactical about my shorts in the S&Ps. So, sell resistance, take them in on breaks, don't marry it. So how about peso, had this big wick. I'm wondering, let me look. How long did that wick last?
Couple of hours.
Yeah, literally at
Was it?
night, Dale.
It
Yeah.
was on the Middle East stuff in the Asian market.
Oh.
It didn't last for very long.
Okay, so
5 minutes,
I was
I think.
looking for the bar. It's probably further back. So you really have to be quick on the trigger to
Dale, I
capitalize
actually had
on
a
that.
beer in my hand in
Or a weight.
Austin, Texas,
Look at that.
taking my position off.
All right,
Yeah.
so it lasted, well, that's 2 hours, but it didn't stay up here too long, did it? And that
No,
is a luck. You know what? I'd save that beer, Ken.
it was literally, I mean, I was long and it was like
Yeah.
literally at night. And only reason why I saw it is my phone started blowing up. We got some ForexAnalytix alerts from, resistance levels being breached, and then people started texting me. So,
Yeah.
I mean, because
Yeah,
there's a
that's
few people that I knew that were long. Yeah.
Yeah, it's like a 2-month move in an hour.
And Eric, you were 100%. Shiners do not come in cans. That's correct.
Oh, that's what you were drinking. Okay.
Of course, I'm in Texas. Do as the
all right.
Texans do, right? While
So
in Rome.
here's gold back to the overthrow line here. So holding it so far.
Yeah, gold
And,
has broken an ascending channel. If you want me to show it, I can show that.
Go ahead. Yeah, go ahead.
Hey,
And horizontal support as well, right? Around 23, 20, 25.
Yeah, here I'll just pull up gold. So gold took out, well, you can see it this way too. This will probably be a better view because you can see yesterday's move. So this is last night as we broke through the 2320, but you can see this is like channel support. There's a horizontal support, and you can see relative strength started to break down yesterday afternoon. So this is at the end of the day yesterday, and so last night in Asia we broke through that support, and I mean, it still seems like we could pull back a little bit, but we're getting to the 127% extension. You can see that at 2290. So that's right there, and then the 161% extension is going to be 2250. And Kman, you say horizontal support. Where do you see
there
that?
was a bit of support there around 23, 2026. Had a few lines there, and we stopped there twice. So I think that's an important enough little zone there too. And when it started to come down, when Lavrov said yesterday that they were nearly done with their de-dollarization between Russia and China, and all of a sudden gold started to lose its beat, and dollar China starts to move higher.
That's interesting. That is interesting. And gold has been a tricky one, and I think that I think you make a great point that this move wasn't just, or wasn't necessarily yields or the dollar, but like a direct correlation to the dollar, but the de-dollarization story. And it's been cited by a few people that we've talked to in recent months that this diversification away from the dollar has been pretty significant as of late. So that's a great point that you bring up. I want to real quick, Dale, you were talking about the S&P and talking about where we could recover to, and Ryan, I think I'd have to agree with you. If we can't pull back below 4,800, you have to realize that this is a This is just a 38% retracement, after a big bullish breakout. So this 4,800 is going to be really big on the way back down. I think that's the most important level to be watching. But the question is, and this is the question I'm going to have for you guys, what do you think? Here we are Monday. We still have PCE this week. We have big earnings. We have Tesla, who reports today after the close. Tomorrow we've got Facebook, we got Qualcomm, IBM, Boeing. A lot of earnings that are happening. We're in the bulk of it right now. I mean, does the S&P rally to 5,100, or do we just continue to bleed back to this 48.40 level, real key 38% retracement breakout point? See, personally, I think that the market continues to push higher towards 5,100, and then I want to be a seller, right around here, 50.80 to 5,100. That's what I think. I just don't know if we're going to be lucky enough to get up there. What are your thoughts, Ryan? Do you think we get a little bit of a lift here, or do you think we just continue to drift back towards this support zone?
Well, I think I don't know if earnings has much of an impact anymore. I mean, we had some decent earnings out, a week or so ago, start of the week, financials, and it did nothing but drop stocks. So, I think earnings, like you expect earnings to have an effect on stock market indices, but it tends to trade different things nowadays. If we've made a low and we've pushed up from that low, that's going to be important. So down at that low 49 handle, that low you've got on the chart there, that's going to be important now because that sets a bit of a support boundary ahead of that 38.2. I've got 50, that 50, 40, 50 area first as a bounce level for resistance. Get over that, then it's 50, 80 and up to 51 as you mentioned. But if you get up there, there's every chance we can get up there. I mean, it's putting 100, 80, 100 pips off the low. So of course it can go back up there. It's question what it does when it gets up there. If it gets back above 5,100, then it's probably going to encourage more buyers who think, oh right, this is a dip and we're going to chase it higher. Sellers will run out of town again, and we probably go on to test the highs again. But conversely, if we get up 51, dip back, then you're going to watch to see what happens to those low 49s again, that prior low. If that holds again, then we got a bit of a battle on.
So, and thank you for that. Dale, I know you focus on other indices too. You're looking at what's happening in the NASDAQ and everything else. So which market do you think is still the one that you would focus on if you're gonna start thinking for shorts or failures? Which indice or which section of the market are you going to really focus on?
Well, the S&Ps are, broadly followed, and I think that they'll all break to different degrees, but there's probably more air left in NASDAQ than S&Ps. So they really have been leading the way down.
Yeah, and you can see we're getting real close to to that breakout point too, which is 16,700. And so I'm assuming a test of that level is going to coincide with probably around the S&P around this 48, and change. But maybe the NASDAQ ends up leading, which will be interesting. And with big companies like Facebook, I haven't looked at all the earnings calendars this week. I know Facebook does have earnings tomorrow, and I'm sure as I just mentioned, Qualcomm, and I'm sure there's some other big tech names throughout the course of the week that actually I can probably.
It led the way up. Why not lead the way down?
Yeah, I mean, yeah, why not? Exactly. We have Facebook tomorrow. We have IBM, which even though it's not a NASDAQ component, still, chip stock, if you will. We have Microsoft, Google on Thursday, Caterpillar, Intel on Thursday. So a lot of big names that could really put us over, to this support. So I don't know. I'm gonna be watching earnings. I want to watch for failures. I'm going to watch for any type of rally and look for it to fail. I'd like to see the Russell, continue to show weakness too. I mean, the Russell 2000 has been, just the weak sister, and it's kind of continues to be that way as well. Let's shift over to Australia tonight. Tonight we have Australian CPI. Kman, do you have any feel about Australia? And it's holding up pretty well. I mean, I have to say the Aussie's holding up fairly well.
Yeah.
What do you say?
The market seems to be constantly looking for it to come down to give RBA reasons to start cutting. And it has to be said that this Aussie is relatively resilient. And I'm going to say that it's not going to take a big beat for Aussie to revisit 65 cents and perhaps even that 65, 25, 45, 25, 40 zone if we get a beat. I'm just a little nervous about wanting to trade the Aussie on the short side right now, and I'm actually looking at stuff like Euro Aussie also. If we get a little bit of a blip higher, I may give it a try on the other side, because the Aussie, Kiwi, Kiwi perhaps a bit to a lesser extent, but Aussie, Kiwi, CAD, they seem to be in the same boat when it comes to cross trading. It seems like there's a bit of a basket case going on there in between those three and then versus the rest. So it's not going to take too much of a beat to see the Aussie trade a bit higher across the board. That's my feeling.
I'm gonna give you guys a little like freebie in here. If you guys aren't involved in like the ForexAnalytix community, you should be. Then I'm gonna just show you guys this so you can see it. And that's just from comments from earlier. Let me share with you guys. Like when we talk about what we're looking for, like you can see in the euro, I've meant to put in orders to short the euro dollar overnight at the 108.60 level. I had mentioned it yesterday, except I was working on about 4 hours of sleep, so I totally spaced it when I went to bed. But we basically hit that and rejected following the PMIs. I have very similar feelings about the Aussie today, and about what I want to do with the Aussie dollar. Just keep in mind that we do have CPI, and when Kman was saying there are people that want to just sell into rallies, I had my hand up. I'm like, yeah, that's me. I actually want to, although I'm not. I'm fully aware that we're coming into some really, really critical support as we get down towards the 6,400 level. And remember, Dale, we've been talking about this level for a long time. I mean, back when we were up around the 66, 67 cent level, we're looking for us to get down here, and we're here now.
Well, we almost got there in October. I mean, and then had that pretty big rally. So here we are again. If you go to a 4 hour, you see those two spikes.
This one here,
that and the one prior.
Just so you know, Dale, this one right here was the same night that
the
it was
attack.
Thursday. Yeah.
So maybe it's aberrational, but it looks incomplete, and looks like there could be one more. See how it diverged on that attack or retaliation that turned out to be no big deal. And I think we could get one more low. I'm buying it, should that happen.
Yeah, and I would join you. I actually if you're in the ForexAnalytix community, I even popped in while I had a Shiner Bach in my hand in Texas, and I was short Aussies, short euros, long dollar mex, and I got out of everything on that spike lower, and just took advantage of it. Because you're right, Dale, when I took a glance at it, even not fully engaged in the market, relative strength has been very divergent. So if we do make our way down here, there is a real key level of support. The problem that I have with the Aussie dollar, and I'm just going to say this out loud, and you know, just because it is a commodity currency, which tends to act better in bullish and you know, growth type of environments. It's just it looks like crap. I mean, you look at it how it's performed with the stock market at all-time highs and hasn't done anything. And so my fear is, because I really actually want to buy the Aussie longer term, because I think commodities are going to continue to retain a bid, even as, you know, the sticky inflationary era that we're in. I think commodities are going to do a bit better, even if stocks do worse. So even if stocks come down, I think these commodity currencies are going to be bought, but I just don't know where. And I don't know if it's at 64 cents, if it's at 62 cents, if it's at you know 59 cents. I don't know. But I am a little
wait for a signal.
Yeah, I want to buy them, but I'm a little scared too. What are your thoughts there, Ryan? You know, with these commodity currencies, given the fact that they just have not performed well, and you know, well, you can just, you know, match it up to the S&P here, and you guys get my drift. You know, considering it's, you know, normal correlation, and you know, again, growth environment, or at least bullish risk environment, and these commodity currencies over the last 6 months haven't done. They've done opposite of what you'd think. Any thoughts there?
Yeah, it just shows you what that means for correlations. Like we just spoke about, correlations are out the window. You know, you can't trade the S&P on the back of the Aussie. You can't trade the Aussie on the back of the S&P. Trade them each individually in what they're doing. Aussie's in a downtrend. Again, it's been in a downtrend, as you can see there, since 2021. Is there anything that's changing that at the moment? No, but you've got enough. There's enough short-term trades to play both ways. We're playing big figure ping pong in a lot of pairs. 64 Aussie, 65 on top. You know, the same as 106, 107 euro, 124, 125. 123, 124 cable. So, you know, the opportunities are there if you want them. You don't have to wait for a break below a level to start buying it when it comes back to that level. You know, you've had a couple of chances to trade, you know, between 64 and 65. All right, you might have got stopped out on that spike, but, you know, it's the 64 still the level, irrespective of those dips under.
Yeah. Well, today we have, and I forgot to ask you guys about this. So, Kman, I'll start with you. So we had services PMI out of both Eurozone and the UK look a little bit better. Manufacturing PMIs look like absolute garbage again. What do you make about this data, and what do you expect out of US PMIs today?
Yep, divergence between manufacturing and services still pretty much there as it was. So we had this on the back of those beats in services, higher prices, market European yields ticking up a little bit, and actually both in sterling and euro, exactly the same thing happened. But we're not really running away in the yields environment either. It just shows that the market, wants to cling on to a bit of those green shoots. But as I was saying as well later on, if we get the same picture in the US that the composite services beat, then we're back in the middle, you know, and we're probably going to continue to trade those ranges. So now it's over to the US. We've had our bit of a up and down blip on the on both cable and the euro. Actually, sterling is holding up better because Pill and Haskell are both fighting back against too early rate expectations in the UK. But yeah, based on the PMIs, it's they're very much in line with each other across all the developed world really. So I'm not sure. I mean, what to expect later on, but there are some shoots in the European zone, but it's all based on prices. It's not really based on economic outlook.
Yeah, and so do you think? And we don't have a guest today, is that correct, Dale?
We do.
Oh, we do. Okay. So
Yeah, he's already there.
I'm going to let you take over. Let me ask both you this, and then I'm going to go back to Ryan really quick because Dale's going to take over. Do you think that the U.S. data, we're going to continue to see this U.S. exceptionalism that we've seen? I mean, it's been really showcased over the last, man, that's one of the things that's held up the dollar. Do you think that's what markets going to be looking for today again, is just will U.S. PMIs come in better than expected?
Who's that to? Either of us?
Oh, either one of you. I was going to ask Kman and then you, but it's fine. What are your thoughts there, Ryan?
It needs to, doesn't it? I think that's the bigger question. It needs to. If it's going to keep this higher for longer message going, the data needs to keep confirming it. And if it doesn't, then the market's going to flip around. We're expecting a small uplift in services and manufacturing by a couple of points, but you look at that, but you've got to look at the underlying components, like in all the PMIs, Japan, Australia, Germany, France, price pressures, still gaining. And you got to wonder how long before we start seeing that feed into the headline data. Eurozone inflation's coming down, yet all we've been reading in the PMIs for the last 4 or 5 months is price pressures increasing. So there's something going on that we need to keep an eye on underneath.
It looks like
just
a
had services from the Philly Fed
wave
coming out as well, minus 12.4, better than a minus 18.3, but that's still in negative.
Looks like a wave 4 triangle, and yeah, it looks like a wave 4 triangle, which would imply one more thrust to the upside. A terminal thrust is usually what comes out of a 4 like that. You could just have, 106.80. Just take out the that high, but not take out 107.40. Yeah, something like that, maybe into the inflation number.
Well, PCE is going to be a big one, and that happens on Friday, but we have a lot of earnings between now and then. We also have, other data too. Watch CPI data tonight out of Australia. That happens at 9:30 p.m. Eastern if you're out there on the East Coast. Tomorrow we're going to have Canadian retail sales. We're going to be covering those here, and durable goods. So make sure you guys are around tomorrow, and jump in the ForexAnalytix chat room with us, with Kman, with Ryan, myself, and do it. And Dale, speaking of which, I know you have an interview with Mr. Dawson. So
yeah,
do it. All right, guys.
Yeah, just do it like Nike. Surround yourself with traders better than yourself. Right, Don? Isn't that what we did when we were young men? We looked for. Can you remember that far back?
I just started sitting here thinking the same thing. I was going, I don't know if I can remember back to being young.
Anyway, I know I did, and there were a lot around at the CME, so I was lucky. He had some of the best traders on the globe down there. So it's great to have you back, Don. And
nice
last time you made a pretty good call on seasonals for a dollar rally, which is still kind of ongoing. I'm thinking we're peaking here pretty soon if yields like the 10-year gets up to about 78.6 back is 474. So I'm not looking for 5% right away here.
I think you're right on. I agree with you on a 10-year yield. I just I wrote an article about that, about when the Fed talked about that FOMC meeting about 4 or 5 rate cuts this year. That just seemed way out of line. I mean, inflation was not anywhere close to their 2% target, and you'd be talking like that. It was an election year, so you kind of took it as that type of a stance. That's really what that was.
Okay, and so we're close to the October highs, but that's about 78.6 back technically for the 10-year yield, and I'm watching TLT like a hawk down here too. So what's on the docket for us today, Don?
I was going to talk about I was going to share a screen here in a moment, and I'll let's go ahead and pull that up here really quick. Where's everything here?
Always look forward to your visits.
Oh, thanks.
Bring a lot of great content to our community. Want to thank you for that. Okay.
I think you can see my screen now. Just got the bar chart thing on there. So anyway, I write articles for Bar Chart, as you know. I usually write one a week,
Yeah.
and I just written one, I believe it was Sunday evening, and it was on crude oil. And last week was a pretty volatile week in the crude oil markets. I just want to
Sure
talk
was.
about that because that's coming to the end of its really good seasonal pattern. Anyway, if anybody's listeners or viewers are watching this and they want to follow me on these articles, here's how they would do it. It's at barchart.com is the website. And these are all free as well. When they get
Not
into this
stock chart, bar chart.
bar chart, yeah, I'm sorry,
People get them
barchart.com.
confused. Yeah.
Okay. And then there's a news tab right here. You can just click on that. And then over here, it has just featured authors. And then right over here is my name, Don Dawson.
Oh, look, you're on the
And
bill.
yeah, somehow.
Look at young man.
So they
Just a
keep an
young man.
archive. They keep an archive here of all the different articles that I've written about, and it goes all the way back into here. Back in December, I'd written about where we at here. Every crude oil put in its seasonal low early, and this was back in December. And this is such a good seasonal pattern that when it ties into the commitment of traders and the commercials are buying it aggressively at that time, it's usually a pretty good trade. And this year was no exception to it. So I've been writing about this crude rally since December multiple times, and so now we're coming into a juncture right here, and that's what this article I just recently wrote about is crude oil sitting at a critical trend juncture. When you get to this page, by the way, if you want to read these articles and have an email sent to you, there's this follow the author. You can click on that. And again, it's all free, just leaving an email address and they'll send you a link.
Nice.
So anyway,
so let's answer your question. Technically, to me, back under 80 is going to put that as a higher likelihood that the rally is over. And
yeah, it's technically the market is looking a little toppy right now, but the only reason I think it's a short-term top in the market, to tell you the truth. So I mean, as we look at this as a weekly chart right here, and so starting back there in December, you can see this is a typical rally that we get as we come into that January timeframe all the way up until around May 1st. And it's basically, it's the reason it's such a predictable time of the year is because the driving season in the United States starts basically on Memorial Day weekend at the end of May.
Right.
And so there's just the refiners have to start buying up oil early to make the gasoline for the upcoming driving season. So that's what kind of starts a lot of that. And then obviously we've got at the end of December, I think we talked about this maybe on your last show or the one before, but gas prices or oil prices typically decrease going into the end of December. And the reason for that is refiners of gasoline and heating oil, they need to get that oil out of their pipelines. Even if they haven't sold it, they need to get rid of it because the government will tax them as if they had sold it. So they have no incentive to carry that in their pipelines into the new year. So that usually puts some downward pressure on oil coming into the end of the year, which sets up for this bottom typically for the refiners to come in and start buying the oil to go, make this rally up into May 1st. So it's kind of a cool little cyclical pattern that comes into the market as well. So anyway, what I found was on this particular session here, the coming into this close to the May 1st time frame, which is where it usually peaks out up in here. And there's multiple seasonal patterns that come into play in here. And sometimes like more research is who I use for that. And it's they have a 5, a 15, a 30-year pattern they look at. But I got it interesting. I found where the 5 and the 15 is starting to diverge, and we'll talk about that a little bit today. And I think that's what's going to show a different pattern than what we typically see here. Because normally we peak out up in here and we spend the rest of the year just kind of chopping around, maybe making a slightly new high. And then we get into October and we just kind of drop off again. But I'll show you that here in just a moment. So anyway, this has been a really good rally here. I've been pretty happy with that. And the other thing that's helping this rally this year is, as many people know, the Strategic Petroleum Reserve for crude oil stocks, and also known as SPRs. And this graph I had to put on here by the EIA, but one that does a much better job of showing this is the trading economics calendar, because I get a bar chart on here as well. I just want to kind of go back and take a picture where we are in the big picture of the SPR. And if you'll notice, this is going back to the 1980s. And you look over here, that's the levels we're at right now. So this is where the market typically likes to hang around 5 million to 6 million barrels in spare for the SPR. Now, remember, the strategic petroleum reserves are meant to be kept in reserves in case our country goes to war and we need energy and so on. So, I can't think of another time that we're any closer to going to another war than we are right now. And if you look how low our reserves are, we're about halfway, 50% of what we normally have in reserves. You have to go all the way back to 1980 something to find those kind of lows again. So if you'll notice, we're
Yeah.
getting a little blip up here in the SPR. But here's what was interesting about that this year. It was in 2021 is when the government, there we go, the administration started in 2021, started selling our SPRs, trying to lower oil prices. Obviously, it didn't look good for the administration when you had gas prices starting to go through the roof. So they started selling and selling and selling. Now, what's interesting, they in August, this past year, they stopped the selling and they actually started accumulating. So these are weekly bars, by the way. And so all the way up to this point here, September, and it stayed pretty flat. But look what happened right when we came into the middle of December. Look what's been happening every week since. So now, not only have we had the seasonal pattern of refiners having to buy crude oil, the U.S. government has been having to buy oil every week as well. So that really put like a double-edged whammy into this trade. But I do believe that we have some more SPR buying to go. I don't think they can be done with this, considering where we are in the
low
big
it
picture.
is.
You're right. So that's what's got me feeling that oil has got higher to go. Even though we're topping out temporarily, I think just to relieve some of this overbought condition, I think this has to go further. Because like I said, we're the closest we've been to any kind of a war in a very long time.
All right, you brought that up twice. We're close is good for, hand grenades. What do you think is going to be the outcome? You think we're going to have a war, and what may happen as a result of that could be a squeeze on supplies around the Straits of Hormuz or in the Persian Gulf?
And even if we don't get involved in it, something could happen over there between Iran and Israel, whatever. It just seems to be there's a tit for tat going on over there. It just feels like we're on the edge of something wrong happening and causing a bigger scene than what it really needs to. So I'm not going to try and predict a war. I certainly don't want to see a war, but I'm just saying we just seem to be very close to something happening that could restrict our oil flow. And of course, the government putting all these restrictions on our refiners over here or drillers. It's not like we can just flip a switch and tomorrow we're pumping our own oil. It takes a while to get all these wells back up. And like last week, people were excited because we added 2 more rigs to the Hughes Baker oil rig report. That was the first time they've added 2 new rigs in a long period.
For fracking?
Yeah, well, just for drilling of oil. Yeah, same concept, fracking and everything.
Okay.
So
because they've been all way down. I mean,
Yes,
people
they
watching
are.
natural gas, that there's hardly any rigs working. They're demotivated with the natural gas prices down here at what we had, like 30-year lows.
Exactly, really low natural gas. So anyway, all of that said, it's the SPRs I think are going to keep a bid in this market for the longer term picture. Along with, I just want to go down into here, the disaggregated report right here on commitment of traders. Now, I like to look at this, and this is typically like on this one here, the Chicago Mercantile Exchange puts this out, and you can get it anywhere, but they have a really good graphical picture of it. And so what I do is I put this on here, and this is the producer and merchants, which is basically going to have your processors as well. So somebody who drills oil, they're typically going to be in the red bars. They're selling the hedge, right? That's what they would be doing. But the refiners or the processors of oil, that would be the ones who are buying, and that would be like your gasoline refiners or your heating oil refiners. The yellow line is the crude oil price. I just put that one on there instead of the net position. And you can see that once we got down, here's that December low again, the seasonal low. And look who stepped up and started accumulating longs was those refiners. So this is what I like to see every year is the refiners coming in and showing aggressive buying. We actually have some years where we come in January, these guys are nowhere to be found because maybe they did some early like November, December buying, and they don't see the demand for gasoline. But when you look at the article I wrote recently on this, the number of car sales, new car sales, and that's not electric cars. We're talking about the fossil fuel burning cars, is outstanding. How many cars? And come Memorial Day weekend, I always say with all those new cars, are they going to be sitting in their driveways or are they going to be on the highways? And my bet they're going to be on the highways. And I think that's what they're sort of loading up here for, is getting ready for that big driving season. So anyways, I just like seeing this. So even, we've come on up in here, we peaked out in the oil, but these guys, the refiners, week after week, continue to buy more oil contracts. So that tells me they're not done buying yet, all right? So this is kind of looking more of a bullish picture coming into oil. What's not so bullish was, and this could have been because of the oversold nature that we've had in this chart right here of crude oil, which is the daily. When we get back up into here, this was when, let's see, Iran attacked
retaliation.
Israel. Yeah, It went up and down. Okay. And then here was Israel attacking Iran. Boom, boom. And this is not a sign of strength in a market, as we all know. I mean, when you get two nuclear nations lobbing missiles at each other, and at any time a war could break out on that, this price should have gone through the roof, $90, $95 type of thing, right? But it didn't, because it's very overextended. So I think that's right now just putting in a short-term top in crude oil. That's what this type of action is showing me in the market. So I wouldn't be getting excited about getting long real quick, because I think we got to get rid of some of this overbought right here.
Yeah, price levels in mind where you would start to step in.
I really, the only thing I can think of when you look back into
78.
78, yeah, I like old. I'm a big believer in the old resistance becoming support type of a thing. If you're in an uptrend, is buying pullbacks in those kind of areas right there. So we could see that. I don't think that's out of the question. $4 away. So somewhere's in that vicinity, I think we could probably start seeing some accumulation of positions again.
Okay, thanks, John.
The other one is a seasonal pattern coming up, and this is the one that's I kind of like using these for a screener. They're not my holy grail of whether I'm going to buy or sell, but I look at these and I want to see what are the markets, what's that particular market I'm looking at this week is it going to be doing for the next couple of weeks. And this is the one for crude oil on a 15-year historical. It typically bottoms out right here and goes right on up until this May 1st, for 15 years. And on a 30-year, looks exactly the same thing. Very solid pattern. And this is typically, once it peaks out up here, we just kind of go sideways for the rest of the year. Then we come into October, and then the EPA comes out and they announce that they can start selling winter blend gasoline. So there's not as much oil demand, vacations are over, blah, blah. And then prices trickle down into the year end of December, again for the tax selling and everything like that. And then we put another bottom in, and then we start off again for next year, pretty much like we do over here. So that's a 15-year pattern. But what's interesting post-COVID, is the 5-year pattern. So here's what the 5-year pattern has been looking like. And I think this is what we're going to be seeing this year. I think we're going to see this pattern here, because here's where we are right now. We got this sort of almost a double top. But if you look back on the left of crude oil, we do have a peak over there. And now for this year, we've come back up near it. And I think what we're going to see is maybe just a little correction right here that we're in right now, chopping around. But look over here. Here's your July 4th weekend. Remember, there's another demand or high demand for gasoline. So you get that spike for crude oil right there. We pull back a little. Here's Labor Day. We get that little run up into that, and then we'll pull back again. And then over here is where we'll start that October sideways and then down for the winter. I think this is the pattern we're going to see this year. I don't know the price levels we might go up to. It's all going to depend on what's going to happen overseas, in the Middle East, in my opinion.
So it looks like, from the top that we're having, which showed early April, and the pullback, probably May, June. That first break off the double top. Is that May, June? Go down.
Yep.
Left.
Oh, over here?
No, right.
Oh,
yeah, down. Now down.
Yep.
Is that about May?
Yes. Yeah, that's the end of May, right in there, in the beginning of June.
Okay. All right. Good information to have.
Yeah, I just kind of, that's how I'm looking at, with the oil market coming up. I normally I would have been, when I get this is the trade I try and find every year for oil, because it's one of the more reliable ones. And this stuff could just hit or miss. I mean, we get sporadic news events out and it causes oil to spike and go a little crazy. Reminds me of gold sometimes. But oil's got a really good seasonal pattern right here from this January through May 1st. And if you can just latch onto that one, USO or any type of oil market ETF that you can find usually performs very well during that period.
Alexander wants an inheritance from you. Do you know what? Do you know what it is? Your seasonal work. He's going, boy. I hope Don leaves me his seasonal work.
Oh, that's nice.
Yeah. Anyway, you're a legend. You're already an icon.
Oh, well, thank you very much. But that's what I use seasonals for, is that, I try and find markets that have an upcoming reliable pattern and some kind of a fundamental support it. And then I want to tie it into these guys here, especially in the physical commodities, as these producers and commercials. And if they start to show this kind of aggressive activity at the same time as seasonals coming in, this is usually very bullish. And this year, it just happened that when we added this to SPR in there, this was almost a no-brainer of like, hey, this is just looking really good. So, back in December, January, when you started to see this kind of a thing, you're going like, okay, this is going to be a pretty good run in oil this year.
Well, Passover is over the 30th. So we've had some, relative calm, I guess you could call it, there in the Middle East.
Yeah, yeah.
And just like Iran didn't attack during Ramadan, waited for it to be over.
Oh, that's right. That's
Maybe
right. Yeah.
maybe we have some action after the month ends. Hopefully
Yep.
not. I pray for peace, but verify.
Yeah.
Pray,
You know,
but a little different than Reagan. Trust but verify. I pray but verify.
yeah.
So
Whatever it
and
takes to
yeah,
bring peace over there. I don't know what it's
yeah,
going to take, but yeah.
yeah,
And we still got the Straits of Hamas. That's still not a cleared
yeah,
up mess yet either. I mean,
yeah.
it's just that's just going to be another hot area. And I just see you guys were talking a little bit before the show about the S&P and the U.S. economy and stuff. I'm still seeing a recession coming into our country here, and it's just I'm not ruling that out. Just what's coming up.
By the fall around the elections, that would be great timing, wouldn't it?
Oh man, wouldn't it? Wow, that talk about putting a sour picture on somebody's reelection.
Yeah.
But
So we'll see what the market does. Yeah. So you're generally think that what we have in the market right now could turn out to be a major high in the market, or
I think so. I think we've got a chance here that we're going to see a good pullback because was it the Magnificent Seven? I did hear the other
yeah,
day people were saying Magnificent Seven were coming down to levels individually that investors might start stepping up and buying them. But when investors come in to buy, they usually scale in. They're not trying to pick a top or a bottom. So by
right?
scaling in, they could it could last a couple of months for them to get a position in there and get it turned around. But
Yeah,
so
yeah. I
I don't
mean,
know. It's not. I don't think we've got this bull market. I think it's gotten kind of tired, if you will. And I'm not usually a top and bottom picker in the market. Long term, we're still in an uptrend. Monthly charts still look like an uptrend.
yeah.
Excuse me, but the daily certainly showing signs of weakness, and it won't be long before the weekly is too.
Okay. Why don't we wrap it? Do you have a view you want to share on the dollar, which you called
Ah,
that rally? I'm thinking that we could be close to a significant high. I don't know if we
yeah,
should
I
take out
haven't done much
107.30.
analysis. Yeah, I haven't done as much analysis on that. When it's that I could give a really thorough review on it
Okay.
right now. But
Okay.
I guess based off interest rates, I still see we've got a little bit more on the upside in interest rates.
Yeah.
I think there was just too much euphoria in there that got into the market of
Right.
buying the interest rate products, lowering their yields. I don't think that's been washed out yet, and I think that
Okay.
needs to have one more little surge up and
So new
yields.
highs in the 10-year above
Yeah,
5%.
yeah, I think we will press that 5% level.
Okay.
Because it's
All
just
right.
too many people in there got too bullish on the FOMC's what do you
So
call it, the
still
spike.
avoid bonds. Avoid
Yeah,
bonds still,
at least
right?
from the long side right now. So that TLT downtrend doesn't look like it's giving up anytime soon.
Okay. Really, you know, uh, what you say I take into account. And I think other people, it'd be a good idea for them to keep an open mind and read your stuff on barchart.com, Don.
Well, I appreciate that. Thank you. Mhm.
I learn from you every time you're here. You bring up a timely market, and you remind me, kind of take me back with some of the names like More Research and CME and things that I used to follow a lot that I don't follow as much. I'm glad you're still, you know, you're a creature of habit and you're still following these excellent
Yeah,
services.
I've just been around for what 36
Yeah,
years, 37 now. It's same old school stuff. And,
yeah.
sure, we've got a lot of algorithms and all that stuff out there, but I still kind of start my analysis just like I did back in the old days. So, and
Okay.
then
Well,
just go.
when you rewrite your will, what Alexander wants. And he's a pretty darn good trader, so he knows where he knows where the value is.
That's a
So,
good one.
all right, Don, really a pleasure. I want to thank you for coming in and giving our community some good ideas on energy, which is really the lifeblood of every economy in the world still, despite all the green action.
Okay, well, thank
We
you again
need
for
it.
having me.
All right, Don, I'll be in touch. We'll set up a day during the driving season, maybe around 4th of July, sometime this summer. Let's get back together.
That sounds like a good deal. Okay,
All
take
right,
care.
Don
Thanks.
Dawson, my trading warrior brother and kindred spirit from the same generation. Okay, we're still around.
That's right.
Still
We're not
around.
going anywhere anytime soon either.
You can't learn experience. You have to live it. And Don's an example of that. Thank you, buddy.
Thank you, Dale. Thanks.
All right. So that's going to be a wrap, everyone. Hope you enjoyed Don. I always love talking to Don and take what he says seriously. So that's going to be a wrap. Don't just count your barrels of oil, count your blessings, and you could join the team. And looks like it's be about 19 minutes on the morning edge. And if you're unable to do so, dig into your pocket and become part of the best community on the net. So that's a wrap for me, guys. We'll see everyone tomorrow. What's today? Only Tuesday? Turnaround Tuesday? Oh, okay. See everyone tomorrow. Adios.